Bogdan here from System Traders. We've not posted for a while as the markets kept us really busy. In today's episode, we'll be looking at a simple strategy using Bollinger Bands and see if we can improve it. I'm going to state from the beginning that we're going to overfit it, so I don't advise you to trade it like that. Bollinger Bands have two parameters: the lookback period, which is by default 20, and the number of standard deviations, which is by default 2. So basically, it shows us when the price has deviated from the mean with plus and minus 2 standard deviations. So let's test the S&P 500 with multiple versions and see what happens. We're going to start with the default parameters and go long when the price crosses over the lower Bollinger Band and short when the price crosses under the upper Bollinger Band. We're going to run this on the hourly chart on the S&P using one lot for each trade, with no stop loss and no take profits. So for the first version, the results are: we're having a 95% of the time total downtime, a 126% maximum drawdown, 908 total trades, 65% win rate, an annualized return of 16%, a Sharpe ratio of 0.39 with a standard deviation of 40.15. So these ones lost money 2 out of the 5 years which we tested it on, but considering the maximum drawdown of over 100%, this is untradeable. In the second version, we will only use a long-only strategy. So we're going to go long when the price crosses over the lower Bollinger Band, and we exit the trade when the price crosses under the upper band. Let's have a look at the results. So we've got 82% total downtime, 83.1% maximum drawdown, 454 number of trades, a win rate of 69.6%, and an annualized return at 22% with a Sharpe ratio of 0.57 and the standard deviation of 39.28%. So this version still lost money 1 of the years, but unlike the first one where we went long and short, has a better win rate, a lower maximum drawdown, and a better return. So we have used the Bollinger Bands as a mean reverting strategy, and we went long and short. But we have also used it as a trend following strategy when we went long only. We're in essence trying to buy the dips. But the main concern that we have right now is that we might be getting way too many false positives by using the default lookback period. So we're going to try and optimize this parameter and widen the bands in an attempt to improve the results. So for our third version, we're going to be using a range between 20 and 400 periods or hours, because we're using on the hour chart and we're just long only. So we notice that the algo has identified a stable area around 250-260 periods where the profit factor is consistent. That means a small change in the lookback period is not going to affect the results too much. It also means that the bands are a lot wider and we're going to get less signals to enter trades. So let's look at the results. We've now got a total downtime of 52%, a maximum drawdown of 66%, 42 trades, a win rate of 78.6%, an annualized return of 27%, with a Sharpe ratio of 0.54. So as we can see, there are 10 times less trades than in the previous example. However, the maximum downtime and the maximum drawdown have decreased significantly, while the annualized return has increased. As opposed to the previous version, this one has not lost money in any of the 5 years. This one, at the end of the day, has turned into a buy the dip type of strategy since we are long only. For the last version, we are going to add a fixed stop loss and see what it does to the strategy. We will be using a stop loss as an ATR of 40 with a multiplier of 5. As a note, we have added the stop loss and not re-optimized the lookback period of the bands. So let's have a look at the results. Now we've got a total downtime of 55%, maximum drawdown of 82.3%, double number of trades as in the previous version at 101, a win rate which is twice as small at 41.6%, an annualized return of 22%. So what happened here? Well, the maximum drawdown and the maximum downtime have increased. But the most interesting fact is that we have turned this strategy into an early loss taker, and it's got a typical win rate of a trend following strategy at 41.6%. The Sharpe ratio has also decreased as the win rate dropped. The only benefit we can actually see is the reduction of risk. So in conclusion, Bollinger Bands can be used both as a mean reverting and trend following indicator. Adding a stop loss can halve the win rate as you get stopped out more often. And sometimes a simple rule is way better for the exit. So just think of the opposite of the entry logic. Now, how can this bond be improved? Well, maybe just add a filter and use the Bollinger Bands as a trigger. By filter, it can be anything like a price being above a certain moving average. The other thing you can do is diversify it across multiple instruments. In the next videos, we'll try and see how diversification would work. Let us know what you think in the comment section, and thanks for watching. We at System Traders are a group of passionate developers and traders with a combined experience of more than 10 years in the development of trading systems. Besides trading our own strategies on our own portfolios, we are developing bespoke strategies. Although it seems simple, building, testing, and running a strategy is not easy. The only way to be able to successfully run it is to know what to expect from it in the future. We can help you backtest, develop, and run your own strategy on stocks, forex, and futures. Feel free to get in touch for a quote on developing your own system. If you liked the video, please give it a thumbs up and don't forget to subscribe. We are happy to run a backtest for you on an indicator of your choice for free if you just leave us a comment with the name of the indicator, instrument, and the lookback period.